Happy Sunday, everybody. Welcome back to Trades and Gains. I'm your host, Max Pitts, and welcome to the show. It is our weekly outlook report, and we are talking about December 2025 kicking off tomorrow. The final lap of this beautiful, dysfunctional stock market triathlon that we like to call America. The holidays are here, which means the S&P is jolly, the Nasdaq is currently drunk, and while the Dow just wants to sit around and watch football on the couch until it casually hits another record without really showing any signs of it. Seriously, markets are drifting back toward all-time highs, like, well, your cousin drifting back toward the dessert table because he quote unquote forgot a fork. We just lived through a choppy November that looked like a cardigan belonging to someone who's eaten nothing but Ozempic gummies for 6 months. But guess what now? The Nasdaq's within 3% of a record, the S&P is within 1%, and even the Dow is less than 2% from a new all-time high. This market refuses to die. It's kind of like the Stranger Things series. Everybody's asking for it, and it looks like Vecma is just never going to die, except Vecma is wearing a Patagonia vest in this case. So, to kick things off, let's talk about these messy vibes that we had to experience through November, aka last month. Meta, well, it dropped it like it was hot, 13%. Nvidia, it fell almost 8%. Oracle basically had the type of month where it makes your therapist say, "So, tell me about your childhood, please." But Google, oh, Google, it shot up 20% like it found performance enhancing drugs in the Gemini model. Alphabet is basically Lance Armstrong if Lance Armstrong also owned every piece of your digital life. Investors, well, they're terrified of an AI bubble, which is just adorable because they've been terrified since the day ChatGPT was launched, which was about 3 years ago. So we've been calling this a bubble for about 3 years now. And at this point, we've moved away from bubble territory and we've moved into lifestyle territory, meaning this is going to get incorporated into all of our lifestyles, except kind of like Peloton, except we're not going to end up with treadmills that eat our pets and kids. Now, Fed officials have entered their mandatory pre-meeting quote unquote blackout period, which means they're not allowed to say anything for a week and a half. Great, right? Oh my God, what could go wrong with that? Well, the only thing better than Jerome Powell talking is, well, Jerome Powell not talking. Traders are now pricing in an 86.9% chance of a rate cut at the December meeting, which means one thing and one thing only. Wall Street is pricing in a rate cut the way your grandma prices in a bottle of Chardonnay at 3 p.m. because it's 5 o'clock somewhere. Meanwhile, the Trump administration is reportedly narrowing in on Powell's replacement. The top contender right now, it's Kevin Hassett, ex-NEC chief economist, and the guy who said markets would flourish back in 2020. So basically, the Fed is handing over the nuclear codes to someone who once got inflation wrong with the confidence of a man ordering for the table at Olive Garden. Now, Wall Street strategists have entered their favorite time of the year. Throw spaghetti at the forecast wall and see what sticks. And bold calls are already starting to roll in. JP Morgan has a target of the S&P 500 hitting $7,500 baseline and 8,000 if rate cuts keep coming. HSBC is at 7,500. Deutsche Bank is at 8,000. Morgan Stanley is at 7,800, calling this a quote-unquote new bull market. Now, this is the part of the show where I have to remind you, these are the same people who didn't see 2022 coming, or 2020, or 2008. But now, everyone agrees. This time it's different, kind of like what you hear from your cheating significant other, because apparently the AI supercycle is the market equivalent of Ozempic right now. It makes you look good and hide the underlying health problems. Now, AI is the economy daddy at this point. It's the daddy for Wall Street. And they're basically saying, yes, the economy is polarized. The consumer is strained. Inflation is sticky. Layoffs, well, they're rising too. But my God, have you seen those AI CapEx numbers? We're in a world where the economy is increasingly K-shaped. This means the wealthy get more wealth, the poor get more Apple Card decline notifications that are rolling through their phone versus text messages. AI is making all of this worse, but also it's making the markets richer. And what does Wall Street love? Money. They don't want to solve inequality. That's a poor man's game. They treat inequality the same way Hollywood treats aging actresses. You could say child actors, but let's be honest, Hollywood loves their child actors probably a little too much. Now, strategists say volatility will continue into 2026. The translation, well, you're going to get punched in the face a few times, but look at your portfolio. You'll still be rich. LPL's Jeff Butchbinder basically put it perfectly. Volatility is the toll investors pay on the road to attractive long-term returns. Beautiful. Inspirational. God dang, I might just cry. I might just break out and cry, honey. And it's almost poetic. It's like the financial version of no pain, no gain, unless you're meta shareholders last month, in which case you just felt pain, 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 and were wondering when they would finally pull out. Now, what are we going to watch this week? Economic releases are returning now that the government shutdown is over. Yay! We have PMIs, manufacturing plus services. We have ADP private payrolls that are going to come in. We have import-export price index. We have ISM services. We have jobless claims. We have PCE inflation, Powell's favorite. And we have Michigan sentiment. And earnings that I'm going to be watching this week will be Salesforce, CrowdStrike, Snowflake, Dollar Tree, Dollar General, and Five Below. And those last three are retailers whose entire business model is you're poor and we know it, so come to Papa. Plus, we have IoT reporting, DocuSign, HP Enterprises, Ulta, TD, and more. Maybe we'll get into those later. Now, let's go ahead, wrap this up so you guys can go enjoy your Sunday and I can go make some degenerate football bets. We're entering the last month of the year filled with AI mania, rate cut roulette, a government shutdown, record market highs, layoffs, bubble talk, election drama, economic drama, and Google becoming the LeBron James of AI chips, which I guarantee you, other than Stacks AI, no one had that on their bingo card. Again, $12 million spent October 9th on 280 calls. That was the signal. December is where we find out whether markets want to rally into Christmas, sleep into New Year's, or panic like Mr. Krabs every time Nvidia drops 1%. But here's the truth, and I want to leave you with this. The American stock market has survived wars, recessions, pandemics, elections, disasters, and crypto bros. It will survive December, too, and probably set another record while it's at it. Go ahead, have a great day. This is Max. This is Trades and Gains. Don't forget, sign up, Investor Central Club, your favorite and most reliable source for your daily breaking news. I'll see you guys in the next episode. Make sure you like, subscribe. Tell me one stock I should buy in December, and maybe I'll add it to my portfolio in the comments. See you guys in the next episode.